Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A third bearish black crow yesterday and a continuation lower from the possible tweezer top formed late last week. The cap was once again the middle tine, highlighted in red on my daily chart, of the late November 2022, early January bullish Andrews pitchfork, currently at 108.79, whilst the support below was, unsurprisingly, the May 2020 low at 107.66. Below this May low is the April 2020 low at 107.25 as the next support. This saw actions last week. Now, meanwhile, above, the next resistance of note, past the middle tine, is the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Now, so far today, a reactionary move back up, utilizing once again that May 2020 low at 107.66, and now approaching, but not just yet reaching, the middle tine. If it does, then we now have the possibility for today to be a key reversal. But we're not quite just there yet. Cable, aka sterling against the US dollar. A key reversal up yesterday, and what may become, probably only with hindsight though, a possible significant key reversal up. You see, we are now completely outside not only the apex, but also the whole of the September 2022 to January ascending wedge pattern, and by now we would need to see a direction from this pattern, especially after all the false breaks in both directions. The market punched up and closed over the June 2020 low at 122.48 after finding support again from the Fibonacci and other closing based congestion in the 121.50 zone. Below that, we have further support from the May 2020 low at 120.73, the lower tine, currently 120.58, of the as yet untested early November to early January bullish Andrews pitchfork, the rising short medium moving average, currently 120.36, and the slowly declining long moving average, currently 119.72. Looking above, we have resistance at the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, and then interestingly nothing until the December 2022 high at 124.45, with nothing more after that until some May to June based congestion, starting in the 124.65 area up to the September 2020 low at 126.72, and within which is currently lurking the middle tine, currently at 125.96 of the same untested bullish Andrews pitchfork. Overall, the late September to late November 2022 ascending wedge pattern is still the most relevant pattern here that is influencing this market. Now, I've highlighted the trend lines for this pattern in dark blue to help visualize what is going on. Prices had previously managed to reach the primary target for this pattern in the 124.20 area, though we still have open the secondary harder to reach target X3 in the 128 even area. And so far today, a move down, looking like an ammunition gathering exercise, down to the June 2020 low at 122.48 before a move higher and over the 50% Fibonacci line at 123.16. It'll be interesting to see whether the market can stabilize or even capitalize on this move higher. If so, then it needs to be done by the weekend. Euro sterling. A really interesting combined key reversal down and bearish engulfing pattern yesterday, as it seems that the 50% Fibonacci line of the March 2020 to March 2022 move at 88.51 has belatedly worked its effect upon the prices, or effects upon the prices. You remember this was the cap on the roof pattern seen back in November. What adds to the interest was that last week was a weekly key reversal up, and right now that looks like a very much countered pattern. The move down stopped just short of the January low made last week at 87.67. Now looking below this, well, we don't have that much until the combination of the April 2021 high at 87.19, and perhaps more importantly, the swirling entwined mass of the rising medium moving average, currently 87.25, and the short medium moving average, currently 87.29. These two moving averages had made what I call the mutated golden cross, with the moving averages the wrong way round, followed by a genuine golden cross last week. Beyond these, the next support on the downside is the April 2020 low at 86.69. And I'm not sure how strong that is, as it has been eroded during most of the second half of the last year. Now, so far today, a slightly higher open, followed by a small move lower, just below last week's low, before reverting back up again. And looking right now, well, it was borderline an indecisive spinning top, and it's more like an indecisive doji cross right now. US dollar against the Indian rupee. An indecisive spinning top yesterday, marking the end of the reactionary move back up from last week's testing down to the key 50% Fibonacci line of the September to October 2022 move at 81.13. The top side was pretty obviously capped by the rising medium moving average, currently 81.70. Despite on a closing basis, or especially on a closing basis I should say, and also influenced, if not directly testing, the declining short medium moving average, currently at 81.98. Looking below the 50% Fibonacci line, we have the interesting uptrend from the start of August 2022, currently at 80.88, which is the lower trend line of the August to September 2022 ascending triangle, as well as a little lower the middle time, currently at 80.42 of the October 22 to January 23 bearish Andrews pitch hook, highlighted in dark blue on my daily chart. Meanwhile, above the moving averages, we have the upper time, currently 82.52 of the same bearish Andrews pitch hook. Overhead, the big pattern here is not the bearish Andrews pitch hook, though it is big enough on its own. Though not that old, rather it is the action since September 2022 to date, forming a large double top pattern, an Adam and Eve type pattern. We are currently on the final leg moving lower, and this pattern will very much depend on whether the market will drop down to the neckline, which I'm calling at this moment in the 80-20 zone, and then what the market will do once it gets there. And so far today, a reactionary move lower, away from the medium moving average, and down towards the 50% Fibonacci line, though seemingly unwilling to test it properly just yet. US dollar against the Brazilian real. An immediate countering bearish dark cloud cover pattern type and bearish double yesterday, as the market once again was capped, and this time rejected in force, the testing of the overhead slowly rising long moving average, currently at 517.37. Prices dropped and closed once again below the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87, which also has very nearby further congestion on 510.93 area. Yet perhaps the most interesting recent action has already happened by last Thursday, and that was the setup for a monthly key reversal for January already. If we close on the 31st of January either under 518.51 or over 528.60, then we'd be on. Anything in between will have a lesser outside month pattern. Looking below now, well, we have the middle time currently at 505.74 of the July to September 2022 shallowly but broken bearish shift pitchfork. This pitchfork had previously seen the upper time currently at 528.76, broken a number of times, but I've kept it on here and also highlighted it in dark blue on my daily chart, as it had seemingly repaired itself despite the onslaughts. Meanwhile, above the long moving average, we have congestion at 520.31, and then the 50% Fibonacci line of the March 2021 to May 2022 move at 522.76, before we start hitting the flatlining medium moving average, currently 525.09, and the short medium moving average currently at 526.25. US dollar against the Mexican peso. A reactionary bearish black crow and a new low and low close not seen, well, it all happened yesterday, not seen since February 2020. What was interesting about the action was how it broke down and closed below two key dynamic supports. Firstly, the neckline of the January to May 2021 head and shoulders top, currently at 1869.72, which is highlighted in bright green on my daily chart. and the lower tine of the March to July 2022 shallowly bearish shift pitchfork, currently at 1865.72. If only just on that latter one, and which is highlighted in dark blue on my daily chart. It also continues to be a further move below the broken upper tine, currently 1886 3/4 of the bearish Andrews pitchfork for the same March to July 22 move. Personally, I have not highlighted this one, though I've still kept it on the daily chart. The reason for that is it's been thoroughly broken, and I've doubts about the veracity of this pitchfork going forward. I also should point out that the bearish shift pitchfork, whilst on the surface looking good, it had nevertheless not seen a test of either the upper or lower tine until now. So I treat that lower tine with a touch of healthy doubt. This finally leaves the late September to mid-December 2022 bearish Andrews pitchfork highlighted in bright red on my daily chart. The market's close to the lower tine below, currently at 1856.96. So far today, well, an open on the lower tine of the big March to July shallowly bearish shift pitchfork highlighted in dark blue, and a move lower to test the lower tine of the more recent late September to mid-December 2022 bearish Andrews pitchfork, and that's highlighted in bright red, and it's holding there just above the lower tine and just under the big March to July 2022 shallowly bearish shift pitchfork.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.